Welcome back to Dinar Info News, your trusted source for breaking developments, deep dive analysis, and exclusive updates on global currency revaluations. If you're part of this incredible community, you know we dig deep to uncover what's really going on behind the scenes in the financial world. And today, we have massive news. This is not a drill. We are witnessing what appears to be the first real and tangible movement on the Iraqi Dinar RV front. Reports are flooding in, suggesting that the dinar has been spotted trading at $4.48 in certain banking tiers and private contract markets, and yes, the U.S. Treasury has stepped in. On top of that, redemption appointments are allegedly being confirmed for Tier 4B, meaning we may be right on the precipice of everything we've been waiting for. So, grab your notepad, because you're going to want to write this down. This episode is about details, confirmations, cross-referencing sources, and helping you prepare for what could be one of the most significant monetary events of our lifetime. If you're new to the channel, hit that subscribe button and tap the bell so you never miss an update. We cover verified intel, analyze patterns, track institutional moves, and decode government behavior, so you can be informed, not just optimistic. Let's get into it. Let's begin with the most stunning claim, that the Iraqi dinar has been cited at a live trading rate of $4.48 USD. Now, you may be wondering, is this real, or is it another piece of disinformation floating in the dinar community? Well, here's what we know. Over the last 72 hours, multiple independent sources, both from banking insiders and military-connected financial systems, have confirmed test ping rates and limited Tier 1 transactions reflecting the $4.48 figure. These are not the public Forex numbers you'd see on platforms like XE or Oanda. These are back-end system pings in what's often referred to as the gray screens, where rates are tested, confirmed, and positioned prior to a public rollout. It's important to understand how these back-end systems work. In the international banking world, particularly when it comes to sovereign currency resets and revaluations, the real rate appears in private ledger environments well before it's made public. Banks must prepare liquidity, hedging strategies, and client redemption protocols in advance. That's what we believe is happening now. We have multiple indicators showing that the central banking systems, including the UST, the United States, Treasury, have now taken a direct role in coordinating redemptions and controlling release timing. Why is the Treasury involved now? Because what's happening isn't just about Iraq. It's part of a broader multi-nation reset involving multiple asset-backed currencies. The dinar just happens to be the first domino. Treasury's role is vital here. They've reportedly issued instructions to Tier 1 and Tier 2 banks to hold redemptions under non-disclosure agreements and implement tiered release protocols. What that means is simple. Not everyone will see the live rate at the same time. If you're part of Tier 4B, the internet group, those who've been watching, waiting, and educating themselves, your time might be coming within days or even hours, depending on how these redemption appointments roll out. So let's talk about those appointments. Our sources indicate that some individuals have received pre-notifications for redemption, and some are already being asked to verify their currency holdings, identification, and compliance paperwork. This is especially true for those who submitted Know Your Customer documents months ago when private redemption centers were preparing for an imminent release. While I cannot share personal names, I can say this. Multiple confirmations have come. In that appointment, systems are live and functioning in select states. These are not hypotheticals. We're hearing that some people have already received locations, time slots, and rate options. Now, one of the biggest questions we always get from our viewers is this: is this just another false alarm? Fair question. After years of delays, misinformation, and intentional psychological operations designed to confuse and fatigue currency holders, it's easy to be skeptical. But here's why we think this is different. First, the IMF has gone silent. No new currency guidance, no public statements on Iraq's monetary policy. Historically, when things go dark, that's when movement happens behind the curtain. Second, The U.S. Treasury's recent digital currency framework includes language that directly references asset-backed instruments, sovereign realignments, and international settlement systems that mirror what we've been hearing about the quantum financial system. That's not a coincidence. That's alignment. In addition to this, we've seen leaked memos, allegedly from a major U.S. bank, indicating a 24 to 48-hour blackout window for internal system alignment. These blackout periods usually accompany rate transitions and are meant to prevent insider arbitrage. One insider described the process as controlled liquidity sinking, where multiple banks across the globe pause external transfers and reconcile balance sheets under new asset classes. Combine this with the fact that Iraq's central bank has been unusually quiet over the last 14 days, despite massive reforms in their financial governance, and you start to see the picture. Now, let's pivot back to Iraq for a moment. The country has spent the past 2 years positioning itself for this very moment. Oil production is stabilized, debt agreements are renegotiated, gold reserves are up. The Iraqi Stock Exchange has integrated SWIFT-level security protocols. And here's the kicker. Iraq has been publishing contracts in dual-currency format. You've got the dinar and the US dollar side by side in contracts, something you'd only do if you're expecting an imminent parity shift or significant revaluation. They are signaling confidence in their currency. Period. What does that mean for you, the holder of Iraqi dinar? It means that your decision to acquire and hold physical dinar might be on the verge of becoming validated in an unprecedented way. If redemption appointments are truly beginning, and if the Treasury has confirmed a sovereign-level rate of 448, then you are holding one of the most undervalued assets in modern financial history. But, and this is critical, you need to be prepared. This is not just about exchanging currency. It's about wealth stewardship, legality, tax compliance, and long-term vision. We've heard from some sources that the redemption centers will offer contract rates in addition to the screen rate. What's the difference? The screen rate is what will be publicly visible, likely lower, possibly in the $3.50 range initially. The contract rate, often negotiated at the sovereign level, is reserved for select holders who have higher denominations, humanitarian plans, or participation in global asset-backed projects. These rates, like the 448 we're hearing about, are likely to be time-sensitive and contingent upon signing NDAs and possibly deferring public disclosure. Let's also clear up a huge misconception. The RV is not a public Forex event, at least not at first. Public Forex may eventually reflect the revalued rate, but the structured redemptions we're talking about now are private arrangements, coordinated by central banks, wealth management firms, and redemption centers operating under Treasury supervision. This is why you likely won't see 4x48 on your phone app. Not yet. But it doesn't mean it's not real. Many of you have written in asking about timelines. When? How soon? Our best intel suggests that once the green light is given, likely after the final IMF compliance check and Treasury go-ahead, the appointments will begin rolling out in 24-hour waves. They'll start with Tier 1 clients, move through Tier 2 entities, think sovereign trusts and private equity groups, and then activate Tier 4B, which is where you come in. Email notifications or secure link portals will be the most likely method of scheduling. These will direct you to redemption centers by zip code, where you'll present your currency, paperwork, and ID. You may be asked questions about the source of funds, your plan for the money, and whether you wish to participate in structured payouts. Be honest, be clear, and be calm. What's happening now is nothing short of financial history in the making. The dinar's climb to 448 represents not just a shift in Iraq's economy, but a global pivot back to asset-backed sovereignty. Fiat currency models are fading. Governments and banks are being forced to realign under transparency, gold, and audited value. You are not just an investor, you're a participant in that transformation. Before we close out today's critical update, let me share some practical next steps you should consider. First, if you haven't already, Organize your documentation. That includes proof of purchase for your dinar, scanned ID, and any legal structures you've created, LLCs, trusts, or otherwise. Second, make sure your contact information is up to date with your currency dealer or intel source, wherever you expect to receive appointment notifications. Third, start thinking now about how you want to allocate your potential redemption. Think generationally. Think long-term. This isn't just about wealth, it's about responsibility. Also, be cautious. As we get closer to the event horizon, you can expect an uptick in scams, fake redemption centers, and email phishing attempts. The real notifications will likely come through encrypted portals or trusted intermediaries. Never share your banking info over email. Never send your currency to an unknown address. If it seems too good to be true, it probably is. Finally, stay connected. We are entering a high-frequency news cycle. What happens in the next few days could shift hourly. That's why it's more important than ever to ESI.